Hello, this is Joe Pryor of the virtualrealestateteam.com in Oklahoma City, a part of Redbud Realty and Associates. I recently did a video called Three Strikes and You're Out, and this was for and directed for financially distressed Oklahoma City homeowners who weren't making their house payments because of a financial hardship. And I want to today touch on one of those three and put an emphasis on it, and that is what are loan modifications all about? And one of the things that I mentioned in that video, and this is the most important statistic I can give you, is that of all the people that get involved in a loan modification, 97% of them fail. In other words, only 3% come through on the other side. Why is that? Well, if you need a loan modification, it's because you're underwater on your mortgage, and possibly included in that you have a financial hardship, you've missed some payments, you can't make up all the payments. Typically that's what they want you to do. You can't just say, can I make one out of the 5 missed payments? They want them all at the same time. And so what they do is they say, well look, we'll take your loan, if you can go ahead and make your loan, then what we'll do is we'll kind of work this deal where we'll add that on to it, but you really won't have to pay this $2,000 a month, which would be the two combined together. What we're going to do for a year is just let you pay $1,000 a month, and then we'll reset your mortgage at the end of 12 months. And so what happens in a situation like that is that they're adding what you don't pay on the back end, and so when you come through on the other side, you now have a higher house payment. And if your situation hadn't gotten noticeably better, then you're just deferring the inevitable, which is losing your home. And very often with these folks, they have credit card debt, they have a lot of debt of various kinds that they just can't meet. And so it's just kind of an emotional attachment to the house that makes them want to do something that's not a financially sound idea. Now, another way a loan modification happens, and this has happened recently with one of my short sale clients. We're in the process of getting a short sale approved. We have the contract, it's in with that particular lender. Well, they called me about a week ago and said, well, we got this letter from our lender and it says, congratulations, you have qualified for our loan modification program. This is going to be your payment on July 1st. Now they said, well, what is this? What should I do? And I said, well, let me ask you a question. Are you in a financial position where you're going to be able to make that payment and then make up a bigger payment in about 12 months? They said, absolutely not. And I said, for them, this is just free money. In other words, they know you're in a short sale situation. They know you're way behind. And if you're willing to give them, thousands of dollars in the meantime, my gosh, they'll take it. I mean, this is what financial institutions do. So it's another way loan modifications happen. Now, the third thing I'll tell you about loan modifications on a failure is that if you miss one payment, just one payment, it's over. So in other words, if you had 10 payments that you made of $1,000 a payment, that's $10,000. And all of a sudden something bad happened, like medical, and you just said, well, I can't make it. I gotta take care of my child, my sick child. Well, if you miss that payment, you're done. The loan modification is over, and by the way, you've just lost that $10,000. They're not going to give it back to you, so you've just given that money away. And what is the worst thing about this, and I touched on this in the last video, is at the end of this year, the Forgiveness of Debt Act, where you don't owe IRS taxes on the amount of loss that you take on a short sale or foreclosure, is gone. So in other words, if you defer this until next year and you decide to do a short sale, well, you're still going to owe the IRS money. You may get a $10,000, $15,000, $20,000 tax bill, and it's even worse in foreclosure. So I'm just going to be straight out with you. I don't like loan modifications. I don't like HAMP. I don't like HARP. I don't like what the federal government has done on this. I'm not an anti-federal government guy, but I'm going to tell you these programs have been failures. I think there's deceptive things coming from the lenders that you need to watch out for. What you really need to do is just get off this emotional idea. I know that you raise your kids in that house, but that house is crushing you and it's crushing your family's future. And so what you want to do is just say, forget this loan modification. If 97% failed, those are not good odds. I might as well put all my money into the lottery. I've got about as much chance. In fact, about the same. And so if you do the short sale, then you're going to avoid foreclosure. You're going to preserve what credit you have. You're going to be able to buy a house in the next 2 years. And if you close it before the end of the year, you're not going to have a taxable event with the IRS. And believe me, they always get their money. So when it comes to loan modifications, I say no. When it comes to short sale, I want you to get a hold of me at joe@joepryor.com. That's joe@joepryor.com. Or you can go to our website, avoidforeclosureoklahoma.com, that specifically deals with short sales and foreclosures. This is Joe Pryor with the virtualrealestateteam.com in Oklahoma City, where we deliver traditional real estate values at the speed of technology.